So part two of this here, just so that we can make sure we get this out for just the Discord users. So we're outside of this 1.25 deviation. We know that this is trending higher. We know, once we broke out of that 1.25 and we're really trending, and throughout the day today, buyers look like they were pushing that 2.25. This looked like it wanted to go the other direction. This session immediately looked different from the get-go. Because of the overnight session. Now, here's the 6 o'clock intraday for the U.S. and here's the heavy hitters that came in. This looked volatile this morning. This looked like liquidity was going to be taken, and we did not want to be in the way as a short seller. The previous sessions looked more like the market wanted to go the other way, and we'll take a look at that in a second. And so, continuing with this theory, we're pushing the 2.25. This is absolutely trending higher, right? This is looking strong in this regard. So this is helping us to know the direction of the market, where the money is going, and how to get out of the damn way and be on the right side of the trade. So when we break back into that 1.25 convincingly, we've got to go back down and revisit this control price. This is the place where the market has told us that they're most interested. They want to be buyers. They are accumulating interest here, accumulating positions. So looking at the volume today too, this is really starting to look like, well, the session was in favor of bulls. But towards the end of the session, I don't know, maybe market makers are this late in the session have already gotten into their positions. They're already accumulating. So it's very difficult for them to accumulate positions without the rest of the market knowing. These guys got the ability to push this market and take liquidity to a significant degree that somebody like a small speculator like myself or yourself don't have the ability to do. But they do have the ability to take our liquidity at a moment's notice, right? These guys are the ones who push the market. I do not push the market with my 1 to 5 contracts a day on an intraday chart. We are following the money here, and this is what we're talking about. So a little bit of volatility theory, a little bit of price action theory, it's small bits and pieces here of 5 DMA that we're working with. Moving average is just to help us gain this understanding of which direction the market is going. So let's look at a different chart. Let's look at the 12-hour, for instance. This is bringing in price action theory. This is bringing in Williams indicators, right? And I did this on purpose, I think, so that, come on now. Well, it doesn't want to move. Okay, here we are with our control price, right? This is the relative importance of control price. We would like a control price because we want to know where all the fighting over price is happening. Control price and the 1.25 deviation, right, are going to give us value areas. Let's get on, and the reason why I put the red and I put the green like most people do. I could change the color scheme if I wanted to probably keep myself from agreeing or disagreeing with certain things and getting caught up in the emotion of price action, stop, go, etc. Here's our 12-hour. Here was the greater overall look at the trend. So let's look at 1.25 deviations from the control price. So if we're trending lower here to the 1.25 and the 2.25, 1.25 deviation is considered the area where the most significant amount of trading is going to be happening. Most of the data is going to be contained within 1.25. I think it's probably something like 80%, but you're going to have to look at Mark Whistler's stuff. Up to 2.25, even less data. Up to 3.25, even less data, because it's extremely difficult to break out of those deviations. Energetically speaking, market theory, whatever it is, I'm not going to get into it right now, but when we are trending 2.25 deviations from it, these are better value areas. These are better places to be a buyer. These are better value areas to be a buyer. And is it smart here to be a buyer down here versus up in here? And the answer is yes. If we're in an identifiable downtrend, is it a much better idea to take short positions off of the control price when we're overbought? And the answer is probably emphatically yes. Is it a good idea to take short bids off the 2.25? So we're above the control price, right? We are up above the control. And we've always stated that, based on the theory, is that above the 2.25 deviation, above the control price, this is a sticky situation, right? This is why we're also using Larry's indicators to give us divergences that show up around the 2.25 deviation, because these are better selling opportunities. This is a high value area, and we have a nice established channel. I like this one particularly because this seemed erratic to me. There was no real established working channel on this bounce, on this reaction. I couldn't begin to tell you what market makers were doing at this point in time, but there was nothing really to work with in terms of control price. This did not look sustainable up near the 2.25 deviation, and we were on the Larry's window, Larry's WPR here. We are extremely overbought, at least on the 12-hour. This is a better place to be selling. These are three confluences that work with us that say that you should start thinking about being a seller. And we'll call it even four, because it just didn't look sustainable from an energy perspective, a market perspective. It just didn't look sustainable. The market's going to do what it wants to do, but here was a excellent selling opportunity. Near this 2.25 deviation, right? Is this a better value area to be a buyer as an intraday or even a swing trader? So in this area, we had somewhat of a divergence that was working down here. So this applies to all time frames, but at your own discretion. We are overbought. We do have a slight deviation on the professional buying, and we are near the 2.25. So this could have been a tough one to fight off until we were in the overbought territory. And moderate deviation showed up, but it really wasn't much to place your bet on. But in a downtrend, we are looking for, in a very well established downtrend, we are looking for these overbought scenarios. And wasn't much of the case down here until we get a nice divergence that showed up. But this one would have been very difficult to fight off, with the exception of this. 1.25 lower deviation from the control price, a little bit of a divergence showing up. It was a little bit difficult to peg this one. We eventually went the other way, but this was really, really tough. Underneath control price, still stuck under control price, right? This is a very good control price. We are bouncing along this line. This is where a lot of the data is, a lot of the fighting is going on. Who is going to control the market? Are we going to control it to the upside, or are we controlling it to the downside? So we're going to get into a part 3 here. We'll be back in just a second here.